coming back to you with another Beyond Your Space Needs video blog. I have with me today Jason Levine of Harry Levine Insurance. It's located in Dr. Phillips, which is on the south side of Orlando. I've known Jason now for over 10 years. And
Indeed.
great family owned and operated business. It's an independent agency, correct? And you carry multiple lines of insurance, and they've been an incredible resource to not only my family, but a number of other business owners and families that I serve. And so wanted to kind of chat today a little bit about the importance of insurance for businesses, what we kind of see going on here in Florida, and how it intersects with commercial real estate. So welcome, Jason.
Thanks for having me, Amy.
So talk a little bit about your background, because you've told me before that you're pretty much a nerd when it comes to insurance, and you are constantly going to different seminars, and of course your degrees in that, and this is your family business, it's your father's business, so it's kind of in your blood and something that you love. So tell us a little bit about that.
That is 100% accurate, and I grew up in the business, but in terms of being a true insurance nerd, you actually caught me the rest of the week. Tomorrow, Thursday, Friday, I'm involved with Florida State University has an intercollegiate sales competition, and I'm actually going to be on Disney property playing a role in that intercollegiate sales competition, which is a super cool event, but that's a whole nother ball of wax to talk about. So I went to undergrad at a small school up in Massachusetts, thought I was going to be pre-law, had an interest in aviation as well, and got in a conversation with a dear old friend of my father's who explained that his one regret in life was not having pursued his family's business, which had nothing to do with insurance, but the lesson was taught. And I graduated about a year before my now wife, and decided, let me come home, try it on for size. If I hate it, we'll just go do something else. We're young, we're unencumbered, life is good. And as they say, the rest is history. That led to a master's degree from Florida State's Risk Management and Insurance program. I hold a CPCU, which is Chartered Property and Casualty Underwriter designation, which is one of, some might say but one of the most involved and difficult designations to achieve. So it's something that just has become part of the fabric of who I am as a professional and part of my career. I've also served on numerous industry trade association boards from the local level to the state level, and had involvement on the national level as well. So kind of all things property and casualty insurance are what I eat, drink, breathe, etc.
Yeah. And it's interesting, though, your undergrad was not in insurance, but later on you more than made up for that.
Yep. Undergrad was American Studies and History, and then the graduate degree was Risk Management, and then all the other fun stuff.
So talk about the different types of insurance that a business could have and potentially should have,
Sure.
Depending on the type of business that they are.
Well, you've got your basics, right? You've got general liability, workers' comp, property insurance, which sort of every business owner probably thinks of because they've probably encountered it. But as of late, some of the most important coverage, which really some of it's new even within about the last decade or so, encompasses what we call professional lines. So not your traditional third-party bodily injury or property damage type coverage, but things like data and cyber liability and employment practices liability. And there's much more than that, but those two I like to focus on with business owners because they've become loss leaders. They've become huge areas of concern, and they remain difficult sells. For instance, data and cyber, people go, well, I'm PCI compliant, which means if you accept credit cards, you follow all the protocols, and PCI, your vendor, provides you with a degree of coverage. It's usually somewhere between $25,000 and $50,000 in coverage were a breach to occur. Well, here's the problem with that, and this is now several years old data, but the average cost of a breach is really about $250,000, even for a tiny small business with fewer than 10 employees. The number one cause of a breach is rogue employee, or somebody misusing, stealing that client, whether it's credit card information, social security numbers, any personally identifiable information. You might hear the acronym PII. That's become incredibly important in legal circles and in the insurance world as well. But you've got a ton of laws being passed by various states that, in addition to federal law, require for identity monitoring and all kinds of things if a breach happens. And you actually have to go find people, right? So you can't just go, Amy was my client 3 years ago. She was still in this database. I don't have a good phone number or address or email for her. Oh, well, the law says you've got to actually go find her. So these policies provide, and sometimes there are sublimits, but up to $1 million, sometimes more, of coverage for things like PR firms, for things like finding those people in your database that you are legally bound to notify and offer credit identity theft monitoring to, and just a plethora of other things to help you through the process so that it's not catastrophic to your firm. So that's number one. Well, I have some coverage through my credit card vendor and I'm PCI compliant, so I'm good. Or I only use PayPal. I have a third-party system for taking payments. I'm good. It's never that simple. And trial attorneys are very crafty individuals. And many of them are honorable and wonderful and great at what they do. And many of them are not honorable, but they are wonderful and creative and effective at what they do. So those are the kinds of protections as a business owner that are critical. The other one there was employment practices liability. And this one we have seen so many people get burned so badly on, because this is the kind of thing where you're looking at improper hiring, firing, improper management, harassment, improper payment of wages, or giving raises without proper qualification to one person and not another. And people go, well, I'm a benevolent business owner. I run my business well. I don't do anything wrong, so I just don't need it. Thanks for offering it. Well, the biggest thing about a coverage like that is it's about an accusation. So think now that you're a disgruntled person watching a TV commercial at 2 o'clock in the morning, and there's a personal injury attorney on there saying, sue your employer. Does your employer do this? Or call us? Or
Well, and they're on every station.
Not on every station, that's true.
They're on almost every station, that's what I'm saying.
Oh, yes.
It's like not just one station. Even if they flip the TV, it's like on another station.
Yep. Or if you drive down an interstate, particularly in Florida anymore, every other billboard, if not just every billboard, radio commercials, they are everywhere. So the important thing about EPL is accusations. And I love to tell a story, and I'll try to keep it quick. But we had a restaurant owner, and I think the most claims we've had have come from restaurants, but they come from all over blue collar, white collar, whatever industry sectors. But this gentleman is truly a gentleman, and he had a server who did not have a vehicle and lived about 30 miles across town. So she rode the bus, uphill in the snow both ways, but it was probably a 3-hour bus trip in each direction by the time she was done. And he would cut her during slow time between lunch and dinner, and then bring her back on for the dinner service after lunch. So she asks one day, hey, instead of having to leave, go to the library, go hang out wherever, can I just sit at a table in the back of the restaurant, read a book, listen to music on headphones, whatever? And, she says, yeah, sure, absolutely, sounds good. And what wound up happening is about 9 to 12 months into this arrangement, here came the lawsuit from a very large local, or should I say national, personal injury law firm, alleging that because she had never left the premises, she was actually working the whole time and was due back wages plus interest. That's where EPL would have come in if he had had it. Same thing, I never do anything wrong, I'm a great employer, and all of that's true, but now this person has made this accusation and you cannot not respond. You need a legal defense. So he wound up spending, I think it was 10 or 12,000 on legal fees. In the end, it was dismissed by one court, refiled in another.
Hopefully there was some kind of text or something memorializing this, I hope.
He wound up settling for a low amount. It was like $5,000 or something, but put that on top of the legal fees, now we're at almost $20,000. And employment practices liability on the kind of business owner's policy he had would have been like a couple of $100 a year as an endorsement, as an add-on to that policy. So he spent 20 grand out of pocket instead of $300-400 more per year on his insurance program. And then there are larger policies, standalone policies, that can cost an extra $1,500, $2,500, depending upon the scope and size of your organization. It can be expensive, and especially as it becomes more and more of an issue, the premiums go up as the carriers are having to hire more and more legal defense teams. And when it is, if you make a true honest mistake, an indemnity or a payout can be paid as well. But if you have wanton disregard for labor regulation, clearly that's not going to be covered. They're not going to pay anything out to a claimant on that. But they are still bound to pay your legal defense in most cases. So employment practices liability and data and cyber protection really need to be on every business owner's radar, regardless of the industry segment that they're in.
So it's basically 6 different types. You've got GL, workers' comp, property. What was the other basic one?
You can get into things like inland marine, especially in construction trades or anywhere that there's a lot of specialty property, maybe high-end tech or construction, things like that. But your basics, most business owners are going to understand liability, workers' comp, property. And then you've got, of course, group benefits. You can get into health insurance and all kinds of other things. And then professional liability. So along with that EPL, employment practices liability, and data and cyber, there's also errors and omissions, and that, depending upon your industry segment, can be critical. Amy, you and I both, as fiduciaries in a sense, people who deal with other folks' interests and with contracts. You and I both carry errors and omissions, and there are a ton of skilled professions that require that coverage too.
Yeah, I definitely, I don't know. I don't feel like I could have too much insurance. I like the laying my head down on my pillow at night.
Yes.
The one thing that, though, concerns me is, like, in Florida, since, like, the last time we've had, like, an in-depth conversation in Florida, is the changes to, like, the tort reform and different things if someone actually has to use their insurance. Does that apply as much to businesses, or is that more consumer insurances?
Sure. I can't say that it has no effect on business insurance, but where a lot of the abusive litigation resided in personal lines insurance, and commercial insurance wasn't immune to it, but wasn't as set up for it to be something that the few bad actors could really take advantage of. I don't know that there are huge implications on the business side to it, whereas on the personal line side, we've been able to really move the needle on loss costs and get rid of a lot of abusive litigation while retaining a lot of consumer protections. So as those costs come down, we're starting to see the market stabilize. All of a sudden, on the personal line side, there's a little bit more coverage available. We're starting to see new entrants into the marketplace, new companies selling coverage, and we're even starting to see in some segments premiums actually come down a little bit, which means the tort reform is working.
What do you also think, and I could be wrong, I heard that we might start to see increases capped at like 5% versus 15%, and then there be some transparency as to the earnings of insurance. Have you heard of that?
So there already is incredible transparency regarding the earnings of insurance. It's all public record. And whenever a rate filing is made with the Florida Office of Insurance Regulation, it's either approved, denied, or altered by OIR, by the government regulators. So that's very transparent. What there has been a call for in the state legislature this year is transparency in executive pay. That there has been a call to say, okay, insurance company X, you're saying that your financials are in this position and we need to do more to help clean up the market, deal with abusive litigation, et cetera, et cetera. But how were you able, or not, I'm not saying that this has occurred, but this is, again, what's coming out of the Florida Senate in particular. How can we say that, you're not paying your executives $10 million and then, complaining about your financials? So there is a call for that, which there are some, buzzwords and key talking points there. But the thing is, and I've got some great YouTube channel videos on this that American Integrity Insurance did with us a few years ago. There already is a tremendous degree of transparency there, and insurance companies really cannot profiteer the way that they're regulated in Florida. It's just not a situation that can occur. The other thing going on there is a lot of insurance companies operate something called an MGA, which is called a managing general agency. So you have the insurance company, and then they pay a fee for this MGA, this third party, but they own it, to basically operate everything. So there were some accusations that perhaps they were squirreling money away in the MGAs or something. So those are the two calls that we've seen during this legislative session that's ongoing right now. They surround executive pay and the movement of money between commonly owned entities.
So it almost seems like it's already pretty locked down, but then there could be these couple areas of susceptibility that people are kind of looking into just to further hone things in.
Well, as a financial services industry business, insurance is tremendously regulated. It's one of the most heavily regulated industries out there. And, that's not talked about a lot, but again, we've done with American Integrity. I don't want to try to explain that part myself. That's not my expertise. But if anybody wants to check out the Harry Levine Insurance YouTube channel, there is some content there where Matthew Main, formerly of American Integrity Insurance, really went into that detailed explanation of the regulation and how much profit are Florida-based insurance companies actually allowed to make, how do they have to report, et cetera, et cetera.
It almost seems to me that in some ways it could be a push to try to further deregulate things to go back the other way for all the people on the billboard. To make you worried that there's more to give to consumers or businesses or otherwise.
Well, I think at the end of the day, all the talk, the trial bar, for better or for worse, as a lobbying group, are adversarial generally to the insurance agents, the real estate agents, and the mortgage brokers. And it's not that they're anti-consumer outright, but they make a living by filing lawsuits and taking 25 to 35% of the proceeds, right? So when somebody's legitimately injured, or when an insurance company does not do the best job or does not act the way they're supposed to act, the way they're bound to by their policy, which is a legal contract, that is when an attorney or a public adjuster or a third party along those lines really is worth their value, is worth their fee, and there is a place for them in the marketplace, 100%. But when Florida becomes, so here's the damning statistic. Prior to the tort reform, Florida was responsible for 7 to 8% of homeowners' claims in the United States. Based on the population of the state, the size of the marketplace nationally, et cetera, that made great sense. Okay, Florida's responsible for 7 or 8% of homeowners' insurance claims. Florida was also responsible for 75+%, the exact number is like 76 point something, of litigated homeowners' claims in the country. So we have 7 or 8% of all the claims in the country, but 75%, 3 out of 4 litigated claims in the country. That points to a blatant systemic flaw. And we fixed it, we cleaned it up. When I say we, I mean the state and the legislature. So now we've got to find something else to go after, and the process, the beat goes on, as they say.
Well, and you said that it was in Solo, Seminole, Osceola Lake, and Orange County constituted out of the state of Florida over 90%? Or I can't remember the statistic.
Well, there were 3 primary areas that really became problematic, and for years Miami-Dade, Tri-County, so Miami-Dade, Broward, and Palm Beach were really suffering, and they experienced the hard market, meaning not much coverage available, and what was available was astronomically expensive. They'd been dealing with this for, a decade before it migrated north to the Solo area, and then the Tampa area got pretty bad too. Pinellas not so much, but Hillsborough County, and then, as you stated, Amy, Seminole, Orange Lake, Osceola, kind of went the way that Miami went, but about 10 years later. And again, the tort reforms cleaned it up. But yes, we were a hotbed. And it's the old, if it's too good to be true, it is. If a storm came through and you called a roofer or called a contractor, there wasn't much abuse there. But it's when they came knocking on your door, hey, your neighbor's getting a new roof, we can probably get you one too. If it's too good to be true, it is. And maybe a lot of people got a new roof, but it shut down the marketplace, and it made people, that were paying $1,200 or $1,500 a year for home insurance get a renewal for $4,000 or $5,000. As a matter of fact, latest statistics I've seen this year, the national average for home insurance is like somewhere between $1,500 and $2,000 a year, and Florida's average across all homes. So this could be the McMansions in Palm Beach. This could be a 1950s 900 square foot concrete block 2-bedroom home wherever. The average in Florida is now about $3,500.
Yeah.
It's well above. It's like twice the national average almost.
My goodness. Well, I do commercial real estate. Obviously, you're sitting in a nice office. I found you.
Yeah. Hey, listen. Beyond Commercial did a wonderful job. Let me tell you firsthand.
I work with a lot of business owners that eventually go to buy commercial real estate, or, I guess they could be leasing. How soon, when you're getting into, let's say, an LOI to lease a space, or let's say you're going to buy a space, how much of a runway should you give yourself to get the GL policy, which I assume the time frame will be a little shorter, versus get the property insurance, which might take a little longer? How much time should someone give themselves to do that?
So you hit the nail on the head right there. GL is a simpler process, but the short answer is as much time as you can. The minute you're serious about a property, and I don't mean you're like, oh, I like this property, maybe I'll make an offer, but the minute you decide, all right, I'm going to make an offer, and that offer is then accepted, get with an independent insurance agent and start looking at options. On the general liability side, it can be done on short order. I would say most agents would appreciate at least a couple days, a 5-day business week, but it can be done quicker than that. On the property side, it's Florida. There are inspections that are going to be necessary. Carriers may actually want to send their own inspectors out. If it is older construction versus newer construction, that lengthens that timeline because the underwriting process is going to be a little bit tighter, a little bit stricter. They're going to want to know more. So in that case, I'd say as much time as possible. Hopefully your transaction's moving quickly. But on the property side, particularly anything that was built before, let's say 2002, which is a major shift in building codes, I would say as much time as possible. Maybe a couple of weeks, even if
I was going to say
if they're there to be
weeks
had.
minimum. And even then, that's a good bit of time, but not necessarily an abundant period of time. One other thing I'd recommend for people is before you sign the lease, it's part of my practice to give the clause about insurance to the insurance agent.
Yes.
And you don't want to sign a lease agreeing to get insurance that you might not be able to get, because some of these institutional REITs, they have clauses that maybe more so apply to to New Jersey, but might be something that you can't get here in Florida. And I've had that come up where we go to the insurance agent and they're like, we can't get this kind of insurance.
Not only that, Amy, but some of them are just antiquated. Sometimes you see language that was prevalent beginning of my career 20 something years ago, which is scary to be able to say now. But you see something that, sure, 20 years ago, no problem, we can do that. That slowly over time, and again through this tumultuous marketplace roller coaster that's been the last couple of decades, it just is no longer the commonplace, and is no longer things that are offered, unfortunately, because of some of the abuses. And we're starting to see things now on the commercial side, like where a 10 or $15 million liability umbrella policy was available. Those numbers are down to 2 million, 5 million, and it's becoming extremely difficult to get the higher limits because we're seeing them gone after. We're seeing them pay out. And some of this too has to do with social engineering. That's sort of the buzzword, right? We dealt with the tort reform and the abusive litigation, and now our issue, right, so that the beat goes on, is social engineering and nuclear jury verdicts. So sometimes you see insurance companies settle claims that, why didn't you fight that? You would have won. And the answer is nuclear jury verdicts. And social engineering is the buzzword. And especially with inflation and so many things in society right now, what once seemed like a lot of money doesn't, and juries seem a lot more willing to levy punitive damages and just go, oh, well, we're going to make them pay $25 million. And where verdicts may have been, okay, this was the injury or this was the property damage, and this is what the indemnification or the payout should be. And, it's 1.3 million. that exact same loss, adjusted, let's say adjusted for inflation or all factors equal, what really should be a $1.3 million loss, juries are awarding $10 million on these days. And it really is an interesting phenomenon. And the reaction from the industry is, okay, we're not going to offer a $10 million umbrella because now we're going to know to expect to have to pay it. And if we have to pay it, we have to price our products accordingly. And then the product becomes unaffordable. And that's something people have to remember on both the personal line side and the commercial line side of the house. As these claims costs rise, even if it's not you having the claim, the product, the insurance policy cost has to rise so that the insurer can remain solvent and continue to pay these inflated claims.
Right. Yeah. I mean, once, if you have that, people are going to go for it. I mean, why wouldn't they? So, yeah.
I've made many a poor joke over the last few years about baseball is no longer America's pastime. It is lawsuits.
Very well. I mean, we're inundated as I go up and down I-4 by all those signs, and so it's.
I still say go Red Sox.
You do, really?
I do. Yeah, my mom's from Boston. My wife and I met in school in Boston, and we were there when they broke the curse in 2004 when they won the World Series for the first time in 80-something years.
I'm from Vermont originally, so I am a Red Sox fan.
New Englander.
Yeah, I'm a New Englander.
I love it. Vermont's a beautiful place.
I will be there this summer. I try to go at least once a year. I was just there in October, but well, this was good. Anything else to closing remarks? I think this will be great information for business owners and folks in Florida.
Please, please, please think of your insurance agent as part of your team of trusted advisors. That means your real estate agent, your banker, your attorney, your insurance agent, and your accountant. Those 5 people need to be who you reach out to when you're making a major transaction or making a major decision, like buying a commercial property or expanding your business, going into a new industry segment, et cetera, et cetera. But please, think of those 5 professional experts as your team of advisors. A lot of people might just think of their attorney or just think of their mortgage lender or something like that, because those may be the leading edge professionals for getting something like that done. But do not forget the accountant, the real estate agent, and the insurance agent. We're here to make your life easy and make sure that all your bases are covered.
I totally agree. I had someone who came to me the other day and they're like, well, we have a whole bunch of money. We don't know what to do with it. And we want to buy some commercial real estate. I'm like, rewind. Like, let's talk to, your financial team and see what they think is prudent. Let's see what the bank thinks is good for you guys. And then based on then how much money you have to allocate, I can decide what is good for you to invest in. Whereas I think some agents would just be like, oh, they got money, I can go get them into something. But I would like things to be a very thoughtful, decision. And so it makes sense for them. So yeah, I totally agree. That's one of my first conversations is who is your banker? Who's your CPA? Who do you work with for insurance? All those different things. I want to know who those team members are. So that's great.
Well, thanks for having me, Amy. It's always a pleasure.
Cheers to many more years. And then how do people reach you? It's
harrylevineinsurance.com. You can also look us up on our YouTube channel. We're on LinkedIn. And of course, old school telephone. We still have them. They still ring, and we love to hear live human voices.
Is it 407-855-1000?
You got it. 407-855-1000.
See, I remember. So because I am the person that calls you. I have a real phone at my desk, so.
I love it.
Well, awesome. This has been really good. So I'll keep you posted when this gets posted. And thanks to everybody for tuning in to another Beyond Your Space Needs.
Thanks, Amy. Take care.